Hello everyone, welcome back to my channel. So this video marks the end of the week number 55 in this road to 100k realized return challenge, and as you can see we got rid of basically almost all of our holdings. Everything that had options associated with it basically went away, and also all the put options that we had sold throughout the week and up until today were basically expired, worthless, and so we kept the entire premium with no further commitments to attach to it. And as you can see here, just to show, yeah, here, these are the trades that we did over the course of this week. Now it's probably easier to show it here. So these are, yeah, these are the trades that either expired this week or even expired this week, of course. And even though they were, some of those were entered into last week, and so as a result of this, we still managed to collect, of course, keeping in mind that these trades, we are only considering the returns of the positions that expired or were closed or were assigned in some way. We are not considering those premiums when the position is initiated, and so as you can see here, we can account for this week the total amount of 1,895 euros, which is quite good, but that masks a bit of the reality that has been this week, because more than half of this value was, of course, because of these IWM calls that we sold, these ones right here, which allowed us to pocket more than $1,000, and since this this happened because the premiums were extremely high due to the uncertainty related to the CPI announcement on Tuesday, which was the day these calls expired. Because after that, the premiums that we collected from puts were not that significant, were kind of small. Also, we erred a bit on the side of caution, as you can see here. Most of these probabilities are either probably, with the exception of this one on ARKK, but mostly these probabilities are leaning towards the 90% range of probability of profit, and so that means that we were a bit more conservative in the selection of our puts, and accordingly, because we are a bit more conservative, we are taking less risk, so we also receive less premium. But even so, given the uncertainty that goes on in the markets, even though it's not reflected in the market sentiment because volatility continues to be low, the premiums are also low by extension, and so we receive less cash. Even so, on Wednesday, because we did the previous video midweek, we decided to go ahead and get some exposure on ARKK, the innovation ETF, and this was it appears to be a good bet, even though we have to be very cautious. As you can see here, the strike prices that we chose, 76 and 75.5 for the puts that we sold, and you can see here the returns were very good on an annualized basis, and these probabilities were relatively lower than the ones on the IWM, even though the distance between the stock price and the strike price were quite significant. But that tells all about the volatility that this ETF has, because as you can see here, looking at the chart over the course of a week, when we entered this trade, the stock was around the 78 region, and we played really conservative. We set the we sold 2 puts here at 76 and then another one at 75.5, and still it was only about 80%, a little bit over 80% chance of not being in the money. And so that means that this is as this ETF has a lot of volatility, but of course the premiums are also matching that increased risk. And so I'm strongly considering the fact that if we end up using, and because now we have back all our cash, because all the collateral that we used was released, because of course all the options expire worthless, but keeping in mind that the IWM at this point in time is at around 227, give or take. So if we sell some puts at 226, like the ones we have been selling in the past few days, as you can see here, any leftover cash, probably we are going to continue to be exposed to the ARKK, of course in a conservative way, because the premiums are very, very good, and this will provide us some increased pace on reaching our objective. And of course, but still with a focus of keeping the position small enough, because we don't want to have a large exposure to an ETF which is so volatile. And so this is probably what we'll be doing next week, but we'll have to wait and see what happens. Now, it could have been, and I also considered the fact that since these premiums are being very minute, it would be probably an opportunity to sell some puts on IWM, but expiring later in the week, because now we have this additional screen on interactive brokers here, and here, as you can see, it doesn't show here, so let's see here. Yep. So here, if we sell, for example, some 226 puts at the time the market closed, here we would receive a very good premium, but I decided not to do it, and the reason for that is we will be exposed over the weekend to anything that can happen in the market. Even though the market is closed, the market can still reflect outside of outside of trading hours what is happening over the weekend. And so if things go badly, it may happen that by the time the market opens on Monday, the stock will open already below 226 and the put will already be in the money. So I would prefer to be more cautious, not be exposed over the weekend, and then, depending on where the market stands on Monday, set the strike price according to our needs in order to keep the premium, but try to minimize the chance of being assigned. This, of course, this reasoning is not applicable when it comes to call options, when we already have the shares, because with the shares, having already shares, we know what is the minimum price at which we want to sell the stock, which is at least a break-even point, the cost basis of our shares. So I would do that if we had shares, and so we had to sell calls. But because we don't have the shares, so we are selling puts, we are better off in the long run having the flexibility to set our strike price depending on where the market opens up next Monday. Now, as you can see also here, we roll over the positions on the IWM once they were almost expiring worthless. We rolled over to the QQQ, and this provides us an additional premium, but of course very low given the fact that we are doing this close to the end of the session. Some of the premiums were very, very small, but still it's a step in the right direction. And so for next week, given the amount of cash that we have, I'm not going to count this small amount of euros that we have, but probably we are going to do something like this. So even if we sell 12 so it's divided by 100. So yeah, this will allow us to sell 12 contracts on IWM if we set up a strike price of 226. So, and that means that we will be able to sell, so 12, yeah, so it will still keep us around 5,000, which will not be enough to sell more puts on ARKK because we need around 7,000. But nonetheless, we will settle probably for the XLF again because it's about 5,000 that we need. So we will do that and see what happens next. Or probably we'll sell only 11 and use these $20,000 that still remain, the leftover $22,600, and we basically sell 2 or 3 contracts on ARKK. This is something that is also an option for us, but probably the best course of action is to stick for now in the, for example, Monday and Tuesday for the IWM exclusively, and then towards the end of the week, closer to the expiration, divert a bit more towards the ARKK, because that will also give us a lower degree of uncertainty where the stock will end up the week relative to the strike price of the puts that we will sell on ARKK. This is probably the best course of action. Of course, it depends on where the market stands at the moment at all times, but yeah, we will see. For the time being, I think this is all. Yes, also given the fact that we managed to collect this premium, we are very close already. I did the calculations, and considering all the gains that we had, some of those which are not in here, including the interest and including the exchange rate fluctuations that already have, because this gain, of course, is only about the options and, of course, the sale and acquisition of shares. We are inching very close to the 40k mark, and so that means that we are progressing at a good pace, and as you can imagine, as we collect more and more premiums, the pace at which we will go towards our objective will be quicker and quicker, and so it will take less time from here on end. But for the time being, yeah, this is all. Feel free to leave your comments in the comment section down below, and also I'm also available on LinkedIn in case you want to ask me any questions, and of course feel free to like the video and subscribe to the channel, and we will reconvene on Monday. Yes, either on Monday night or on Tuesday morning, depending on where I stand in terms of my workload. Yeah, I'll see you there, and either on Monday morning, Monday evening or Tuesday morning. Yeah, and that's it. I'll see you there.